Okay, imagine this. Imagine you're so good at your job that for 2 decades straight, you never have a losing year. Now, in the world of hedge fund trading, that sounds impossible, right? More like a myth than a real track record. But for one trader, it was absolutely real. And his story, well, it reveals a pretty powerful secret to success.
Yep, that's the number. 20. 20 consecutive profitable years. I mean, this isn't just a lucky streak. This is a level of consistency that's almost unheard of in the financial markets, a place where, fortunes are made and lost in the blink of an eye.
And we're not talking about some unknown guy here. This is Larry Benedict, a trader so respected that he was featured in the legendary Market Wizards book series. And get this, his chapter was placed right after the billionaire investor Ray Dalio. That tells you everything you need to know about his standing among the absolute elites. So you gotta ask, right? How did he do it? I mean, was it some secret algorithm? A crystal ball? What was the one thing that let him pull off what so many others have tried and failed to do?
So let's talk about that streak. 20 years. How do you even do that? Well, it wasn't about hitting massive home runs. It was a masterclass in playing the long game, day in and day out, through every kind of market you can possibly imagine.
So here's the big reveal. Benedict's secret. It wasn't a crazy, complex algorithm or some genius stock-picking trick. The one thing that defined his entire career was something much more fundamental. It was a relentless, almost obsessive focus on risk management. And for Benedict, risk management isn't just a term you read in a textbook. No, it's the absolute bedrock of everything. It's the discipline that guarantees you live to trade another day. As he puts it, you never ever want to dig yourself a hole so deep that you can't climb back out. Okay, so that's the philosophy, but how did he actually put it into practice? Well, he lived by a set of hard, completely non-negotiable rules that protected not just his money, but maybe more importantly, his mindset.
This was his magic number, 1.5%. That was it. That was the absolute maximum his entire fund was allowed to lose in a single day. It was a hard stop. No exceptions, no maybes, no second guessing. And the rule was just as severe as it sounds. Hitting that 1.5% drawdown didn't just mean, oh, let's close out one bad trade. No way. It meant liquidating every single position. It was his ultimate signal that his entire game plan for the day was wrong, and it was time to shut it down and reassess.
And this ties into one of his most powerful warnings. He calls this classic mistake, adding more money to a losing trade, hoping it'll come back. He calls it the kiss of death. It's a trap he says has wiped out more traders than anything else.
And right here, this is the core difference in mindset, isn't it? The amateur hopes a bad trade will magically turn around, so they double down on their mistake. But the pro, they have that hard stop. They accept they were wrong, they cut the loss, and they save their capital and their mental energy for the next fight.
But, he didn't start out as this disciplined master. Early on, he tried to be a master of everything. He was trading dozens of different stocks, trying to hit a home run on every single trade. And he struggled until he had that light bulb moment. True mastery comes from specialization, from becoming an absolute expert in just a few key areas. All this discipline wasn't just about numbers on a screen. It was about mastering what is, without a doubt, the hardest part of trading, the mental game. This is where most people completely fall apart, and it's exactly where Benedict truly excelled.
So get this, when someone asked him about his best trade ever, he didn't talk about some $10 million day. He talked about his first $1,000 profit. And why? Because that was the moment he proved to himself that it was possible. That psychological breakthrough was worth way more than the money itself.
And this contrast is just fascinating. That first $1,000 win was pure, raw validation. But later, when he was managing a billion-dollar fund, even these massive profits became just numbers on a page. He'd done it. He'd successfully removed the emotion from the dollars and started treating trading like a business, not a trip to the casino. So what does this pro mindset actually look like? Well, it's about resilience, right? You get knocked down, you get right back up. It's about detaching your self-worth from your daily P&L. It means you stop comparing your steady progress to someone else's lottery ticket win. And maybe most of all, it's about understanding a simple human truth. Losses sting way more than wins feel good. And that's why defense has to be your #1 priority.
So after a losing day, Benedict's goal wasn't to win it all back in one heroic trade. Nope. His goal was simple. Just put a P on the page. Make a profit. Any profit, no matter how small. He called it chopping wood. just making these small, consistent gains to methodically rebuild his confidence and his capital.
Okay, so what does all this timeless wisdom mean for us, right here, right now? Well, Benedict has a pretty stark warning for anyone trying to navigate the current market.
He calls it a speculative crisis. And what he means is, we're in an environment where it seems like everyone, from professional investors to their 85-year-old mothers, is chasing these lottery ticket wins. They're all looking for that one home run that's going to change everything overnight.
And this really gets to the heart of his warning. The speculator is always swinging for the fences, just holding on and hoping that massive bet pays off. But the professional, they're playing a totally different game. They're focused on hitting consistent singles and taking profits when they have them. For them, it is a business, not a gamble.
So his advice for today is super clear and actionable. First, stay in your lane. Trade what you actually know. Second, always, and I mean always, have a physical stop loss in place because without it, your emotions will take over. Third, we've heard it before, never, ever average a losing trade. And finally, don't let the fear of paying taxes stop you from taking a profit. A small gain will always be better than a big loss.
Which leaves us with one last question to think about. In a world that's obsessed with overnight success and massive wins, the real lessons from a 20-year winner are all about discipline, defense, and consistency. So the question is, do you have the patience to build a career by hitting singles while everyone else is swinging for the fences?